So this story that I have now is a bit under the radar and a bit unusual for us, but I want to talk about it because I thought it was very significant. Being that we live here and we listen to the politics all the time drives us crazy. The whole idea of, Alberta, the oil capital of Canada, saying that, India will never drive electric vehicles. They're not going to drive Teslas. Well, they will drive Chinese vehicles that start at $10,000 or even less, or their own homegrown vehicles from Tata Motors that are starting for less. They're 2- and 3-wheel transportation. Electrifying is easy. There's all kinds of things
Well,
that they think that the oil is going to last forever. We know, people, listeners know. No,
no,
not
and like
really.
we just talked about, China's electrifying for very practical reasons because they don't want to have to, import their oil from a list of, places they don't want to deal
Yeah, if you
with.
don't have oil, you're going to electrify faster. And that's what we're finding. African countries,
Yeah.
developing nations. We talked about Pakistan recently. So tariffs are likely to crater the Canadian crude exports to the U.S. Marathon tells investors. U.S. refinery giant Marathon Petroleum Company has unequivocally told investors they plan to abandon their longtime Alberta oil patch suppliers now that President Donald Trump has implemented a 10% tariff on Canadian energy imports. And, I'm not really not the federal government increasing that because that's a weakness. If you send up gas prices, that's not really going to affect you. That 10% they say is going to be absorbed by the oil companies and a little bit by the refineries and a little bit by the consumer. So it's not going to be a shock to the consumer. So I wouldn't be surprised if this tariff war continues and to escalate that, and the oil provinces won't like that because they have literally the oil company's hand up their butts. They're not on strings like a puppet. They're the other kind of puppet where the hand goes right inside. That's my view of it. So Alberta has long held close to the myth that Alberta oil will sell forever and demand will stay good for decades to come. And they're starting to get, messages from China as demand is plateauing there because of electrification, and that's really going to increase. I've got stories later in the show about how quickly that is going to change. So in a Q4 earnings call to shareholders, U.S. refinery giant Marathon Petroleum unequivocally told the investors that this is going to happen. Each oil refinery generally is set up to only refine certain types of oil. I have a refinery a couple kilometers away, maybe not even a couple kilometers away. It
Yeah.
refines a certain kind of oil. It can't refine other kinds of oil. It's a heavy oil upgrader. And it costs maybe as much as billions of dollars to upgrade these plants to do something else. So people assumed that that was not going to happen because they have to change everything in the plant, different oil. I mean, I don't think people realize how many different kinds of oil there are, but there are all kinds of different kinds of oil.
Yeah. I mean, I know there's heavy crude and light crude. That's about all I know.
Well, they've got weird names to them too, and some of them include the name sour, which is appropriate. Each oil refinery is generally set up to refine certain oils, and in the Midwest United States, they take our heavy oil and upgrade it and sell it as gasoline there. And that's where a lot of our oil goes to, and the rest goes down to the Gulf Coast. So, unlike electrons, Brian, oil comes in many different varieties, and you have to build a multi-billion-dollar refinery around refining each type. Here's a quote from the story. We could look to pivot to alternative crudes because of our logistics capabilities, said Rick Heslane, Chief Commercial Officer at Marathon. He assured investors asking about the company's tariff exposure to the Canadian heavy oil. I would give you crudes to think of such as Bakken, Rockies, Utica, Marcellus, which that's one I haven't heard of before, and there's a few that we could switch to. So those are all different kinds of oils, Brian. Bakken, which
Well,
comes from around here in North Dakota, right?
yeah, the Bakken is, where we live. Yeah, here in North Dakota.
Here in North Dakota? We're not North Dakota. You just said here in North Dakota.
Here and North
Okay, here
Dakota.
and. I didn't hear the and part.
Although I am going there next week.
Okay,
So who
look out,
knows?
North Dakota. Brian's coming. You know what happened to Wisconsin, so just be careful. Rockies, Utica, Marcellus. We do believe the producer will bear a large part of the impact. So I would say a light switch, a switch from heavy to light within our system, we believe would have minimal impact. And that is something that the Canadian oil evil people have not thought could possibly happen. Yes, they thought that they would not have their backs turned on them.
Yeah, and not to mention the fact that the oil from Alberta is oil sands oil, which is very energy intensive to produce. It's the most expensive oil to produce, so naturally it's going to be susceptible to any slight increase. So we sort of expected them to have problems eventually anyway, just because of the cost. But sure, a little 10% is enough to knock it over the edge of being not profitable.
It's actually fairly significant to the Alberta economy. Canada produces about 5 million barrels of crude per day, 80% of which is delivered to refineries in the United States. Marathon is the biggest of those American processors, handling 2.5 million barrels per day. Almost half of Marathon's capacity is located in the U.S. Midwest, which is the largest U.S. export region for Canadian crude. Now, this story was from DeSmog, and they write the biggest U.S. and Reuters, I should point out. Reuters had the original story. DeSmog picked up on it and added some context and commentary. The biggest U.S. buyers of oil sands crude will have revealed how quickly the Albertan economy will be thrown under the bus if their short-term profitability pointed elsewhere. This truth bomb lay waste to a cherished narrative within the Alberta oil patch that their global market position is secure for decades into the future. Premier Daniel Smith has regularly boasted there is room to double provincial production, which I'm sure she would love to do. They have no sales tax there. They've never had sales tax in my lifetime. And, that's because they're rich with crude.
Yes, Texas tea, as they say.
Yes, if you read the Beverly Hillbillies, which you're not.
Yeah, so that figure surprises me. 80% is exported to the US. I wouldn't have realized that it was that high. And of course, there's a big movement now, buy Canadian here in Canada. Everybody wants to avoid the tariffs by doing more business in Canada, but nobody can flip a switch and do something different with 80% of what's coming out of those oil sands. So this is going to be a very difficult problem.
And remember, the United States is producing a lot more oil due to fracking technology than they used to, and they're
Yeah.
self-sufficient, essentially.
Yeah, going back to the energy crisis from the 70s when, they realized that they had to produce more of their own oil to be less dependent on foreign nations, which we were just talking
But
about.
such a switch would not happen overnight. When a refinery goes down, oil prices go up because, there's been storms and things that have knocked out refineries, and gas prices have gone up. And gas prices, of course, people are not, they're wary of inflation. So when gas goes up, then the masses get uneasy politically. There's unrest.